What a week. Starting a little late this morning from software gremlins. Bug in the machine. Hopefully you guys got good plans for the weekend. All right, that should do it. I think we're ready to go. All right, TGIF, good morning, everybody. Kind of a mixed bag. Hong Kong down more than 1.5%, followed by the UK at 1.25%. All four markets are the only ones in the green across the top. Tech down the most, or basically flat, and the Dow 30 up the most at 0.25%. Japan just slightly in the red, and Hong Kong leading to the downside. So we've got a couple of hot spots today. The biggest one is the Michigan UMich, Michigan Consumer Sentiment Index. I looked around all over the place yesterday trying to find the markets that would be closed today, because there was talk about some markets that were closed. I looked around, I couldn't find any. My expectation was that there would be treasury markets that would be closed, you know, say the dollar or FX markets, things like that. But I looked around, I couldn't find anything. So we knew it wasn't going to be the regular stock market. We knew that was going to be open today. Just kind of was expecting other markets, but so far as I could find, no. So it should just be another business as usual day, even with Veterans Day tomorrow. Lagarde is chipping her teeth right now. But later in the day, we've got Logan, or maybe he's going to go right now too. But we got Bosick, then UMich, European Central Bank later in the morning, and that about wraps it up. Our key this week, or our baseline bet, was to hold the line and really not give anything back, but that we wouldn't really go much further either. Just kind of, we needed to keep this move, right? And to digest it a little bit. Here's your spot gamma levels, SPX and ES. And in some small way, we accomplished that feat, right? Even if we did get a little wild with things yesterday. There's SPY. And the NASDAQ. And someone mentioned yesterday, which I took advantage of it too after they brought it up. Finance Juice is running a special right now. Financial Juice. For 1 year subscription to their service. And it's got Squawk built into it. Yesterday, when I was trading the 1 o'clock bond auction, a few minutes after 1 were the repo numbers. And I caught that on the Squawk before it hit the tape. And I just paid for the whole subscription and for the year with that one trade. I already made my money back. It's like $100 for the whole year. And it absolutely has value. So something to think about. Most of the time in the morning briefing, I try to show you guys tools that are not out-of-pocket costs for you. That way, newer traders shouldn't really focus on out-of-pocket costs, right? Buying a bunch of services and subscriptions. But that squawk, pretty darn handy for that price. I mean, it's really hard to turn it down. So we're still flirting with the volatility trigger level on these on the optionality. As long as we're holding above that volatility trigger, then we're still considered in a bullish market. But it's on the line, and when we're that close to something, it's not very robust in the agreement that we should be looking for bullish opportunities. We still would look for pinning plays that pin to a strike or an option level. And we would expect smaller close to close values when it comes to looking at a daily chart. So we're going to expect the ADR to continue to shrink while we're above the vol trigger. Iron condors and butterflies and pinning plays will work better. And according to Spot Gamma themselves, it tends to act a bit like a support level. And it did so far. We'll see if it can continue to support things if we keep testing against it. Below it is zero gamma. Not quite the same thing. Tend to look at everything as bullish above the vol trigger, bearish below the vol trigger. But zero gamma is where things are really going to change, because instead of trying to monetize the options, they'll sell into things. Okay, get below zero gamma and they'll sell into selling. My volume wasn't down there. All right, so there's the cumulative volume. We're sitting at 105. That's well within normal boundaries, but we do have a market maker move this morning, which is a suggestion that they're hedging in the front end. So they're coming in and they're hedging by trading options in the front. That brings out a market maker move. And it increases how far the average daily range is. Now, there's two ways to look at this. One would be that we take the ADR, the full ADR, and then we add that market maker move to it. And that's generally what we do, right? Take that yellow line, add the market maker move, and that's the edge. But the ADR is a 21-day average. It's just what we have been doing. And the market maker move is based on implied volatility values, options trading. So if you're going to use an options number, why not do the whole thing with an options number? You would look at today's range, which is $22, higher or lower, and then add that market maker move to it, which is call it $14, higher or lower. 14 and 14 is 28. 22 and 22 is 44. Just take 44 and 28. That's your range for today. Using nothing but options values rather than mixing the two up, using chart values, daily average range combined with the market maker move from the options world. So I'd say so far we've accomplished our goal. You know, when we started this week, we were baseline bet, going to hold the line, just kind of chop about here. And our concern were these 2 wicks to the left, that we might run up into this zone, but we'll find it hard to keep it. And that we just needed to not sell off, right? We even marked out the 50% of last week's range. So now we've got this really small weekly print. And as we get into next week, we want to be focusing on, you know, what's next. And if you look in the past at where we've had these big expansion bars, and then we start to get small prints and we just chop about. A lot of wicking activity on each side, a lot of struggle, and just a bunch of small candles. Kind of implying that we could go closer into the holidays where we're going to start getting shorter weeks, right? We're going to have 3.5 day, 4 day weeks. That we could get a lot more of this choppy, sideways, small candle action. And the concern, it's not really a concern, but the idea here is that we might grind to the upside like we did, say, back in March, April, right through that time frame. And we might have ground to the upside, but there was some serious dips down, right? It's about a 150-point range altogether. The other side of that is if we do just shoot through 4,400, we've got some clear moves up into 4550 area before we start running across these wicks over here. So, you know, if we can just get that catalyst, that boost through all of this trash, and next Friday is OPEX. If the call wall is what's holding us back, all that optionality overhead, then the idea is by the end of next week, we could punch through the following week. That would put us into the 20th. $44.15 is where it's showing the call wall this morning. So it's still a ways off. Ten-day, 30-minute volume profile. We have the classic P. We've brought up the point of control now from TPO. We already had it on the volume profile. We've got a massive air pocket of risk down below. So should we break 43.60, there's really nothing there. We've got a minor price shelf around that 43.40 zone. And I mean, really, it's minor. There's not much conviction in that. And below that, free fall, 4,200. That would be a nice reset, right? If we wanted to shake things loose. Still no point of control to carry forward. We are right at yesterday's point of control. Shallow area up through to the roundy, nearly 43.90. We get a nice set of volume, and then at 4,400. It's interesting to note that 4,400 was where the point of control was yesterday, all the way until late afternoon, when this time that we spent down here was enough to bring the volume down. Now, I can't run TPO at this point for just yesterday's session right there, but we didn't spend very long down here. So the TPO wasn't point of control on the low end. The TPO was still point of control way up here because that's where we spent the most amount of time. And yet we had the most amount of volume down here, showing that as we came down into it, we came down into that iceberg. This level really needs to hold. So far, it's looking pretty good. $4,500 is the next VPOC to the upside, and 42.26 is the last VPOC to the downside. Nothing anywhere near us to help us out. Thank you. Someone just pointed out it's where zero gamma is at as well, right? If we go back and look at those levels from spot gamma, I want to continue to stress that our tools are not functioning the way we expect them to at the same time. And the NASDAQ falling and 10-year falling, everything falling. And like, okay, well, one of these is lying. That's not helpful. It's really important to recognize when your tools are not functioning the way that they're supposed to, so that you just don't use them. Just set them aside and forget about it for a little bit. Right now, we've got the bonds and stock moving to the upside, which is nice to see. Remember, risk parity died with COVID. But we got a stale dollar or a stalled dollar with that tweezer bottom here. And if we break that dollar little price shelf and start heading to the downside, say we get below that 105.5 again, we should have a rip-roaring day to the upside. But should is that key word there. Multiple times this week, I've seen the dollar falling and the S&P and the NASDAQ did not rise. So it's not a promise. It's not a guarantee. One thing that I like about this weak dollar this morning, and I cheat and say the dollar, but it's the dollar index, right? It's not really the dollar. It's just easier to call it the dollar. When the dollar index is falling and the 10-year is falling, I feel much better about it. Quite a few times this week, we had the dollar index falling and the 10-year was not necessarily rising, but it wasn't falling with it, right? So seeing it falling, seeing US dollar Japan falling with it, those are kind of confirming signals that, hey, it's doing what it's supposed to do. I'm kind of on board with this, but I'm still stressing caution because look, you got the NASDAQ red, the ES red, the dollar red. What? Wait, hold on, right? That's the disconnect. So just take it with a little bit of caution. Some days things don't do what they're supposed to do, and that's just the way it is. Once we get into open market today, 9:30, you can lean on the tick, the $ TICK, and maybe kind of distance yourself a little bit from the DXY. If we were to replace some of these tools, normally we would just go to TradingView, but me and TradingView got into it this morning, so I have to figure something out with that. Swap out US dollar Japan with SVXY. put the TLT into the ZB. And there's a DXY ratio combo that is kind of nice. I don't think I can do it this way. On Thinkorswim, I don't think we can do it. All right, I guess we can. So run something like a 10-year divided by the DXY. I'll get there's a little calculation needs to be applied in there, but that's close enough. The idea behind this would be that we just step back away from that DXY and try to use some other tools, right? The SVXY is a little bit of a VIX replacement. It's actually going to move with the market where the VIX moves inverse of the market. So with this, if SVXY is moving up, you would expect the S&P and the NASDAQ to move up. We want to continue to watch and see if we keep parity with, not parity, let's get that word out of there. We want to continue to watch and see if we get stocks and bonds both moving in the same direction like we have right now. And if they disconnect, which one disconnects? Do we start to see bonds fade and stocks continue to rise, or stocks fade and bonds continue to rise? It's going to be a weird day. Just keep in mind, all it has to do today is go into the close, keeping the gains that we got last week and maintaining this level, this structure in the upper 50%. And we're way above that upper 50% level. So here's our range for the week that we just worked all the way through. We never got to the edge of the expected move. Certainly didn't close outside of it like we did last week with that 3 standard deviation or 2 standard deviation push last week. We can already see next week's range. Now it's not set in stone yet. It doesn't set until 4:15 tonight. But one thing that we can do early is we can measure the range of the current week. And we can lay that against next week's range and kind of ask the question, is the range wider or more narrow? And that'll give us an idea about volatility. Is it projected to have more volatility next week or less volatility next week? The answer is more, not a drastic sum more, but more. Now through today, we could see that range narrow, and by 4:15 tonight, it might be narrower than this. Don't know, but it gives us a good start of where we're going to be or what we're going to be looking at for a range. Still 0.75% above the 10-day moving average, and we're on our way back to it, although we're starting to flatten out here in the swap bars. Think of this as a bit of a wave. We're on our way back down, but we might not get all the way down before we start running back up again. And from the looks of it, it's starting to come back up again. And on the 10-week, we're not even 1% away. So continue to stress that we're not overbought. That really big move last week did not extend us, quote, too far, too fast. And while I continue to point out that we're a long ways away from the weekly pivot point, because we were, by next week, that pivot point is going to be much closer to us. And so it won't be this overextended that we were earlier, like yesterday and the day before. That was a considerable distance from that weekly pivot point, but we've halved that distance already. So we're a lot closer to it. We do have an MDP. So far today, we haven't hit that daily pivot point. So one of the things we want to focus on is if we do make a break through this Globex wick zone, that's the target, and that's the first touch rejection that we want to aim for. I'm trying to remember if the ES hit that previous week or the ADR levels this week, and how many times we went past it. But again, we got to have to readjust the trading view so I can check that. Just keep your eye on the news today. I think it's going to be a pretty laid back once we get past you, Mitch. China ADRs, nat gas. That's what's down. And for what's up, Bitcoin, energy, bonds, banks, and more energy. Well, that's not overly dramatic. It looks like those China ADRs are trying to turn around a little bit. They're working their way back through this gap. Nat gas is still a mess. And with gold falling like that, really would have expected US dollar Japan to be up more. Guess it's up and up. 151.5. I'd be looking for this to hit that resistance and fall back. If we get a fall back in US dollar Japan, gold and gold proxies might be a nice day trade. We'd be looking for these to flip and rip back up, say on GLD, back into the 181.5, maybe up into 182. Be a nice way to go into the close. Or silver, which is certainly a cheaper product. It's already starting a little bit, trying to make its way back up. Could aim for, say, 21. 7-day option for the 21 strike is 20 cents. That's not bad. It's a little cheapy, right? If you was to go out to the December 15, 35 days out, you're looking at about $56 for a call option at the 21 strike. I don't advise 0-day moves like this, but if you were to use something like a gamma scalp play, today's 0-day options on the 21 strike has a 66-cent gamma strike. So, you know, think about front loading or multiple levels of optionality. How much will this option change in value if we were to change from 2 strikes? So shift it once, that would move it from a 4-cent option to a 27-cent option. Shift it one more time, and you go from 27 cents to 76 cents. It's a pretty nice move. Gamma scalping, right? The in the money option has a $1.50 gamma today. At the moment, anyways. You can see how shifting that just one strike higher from $76 to $1.25, call it a 50-cent increase. Very nice. Gamma scalping and silver. It's not a bad way to go if we do get that fall in the US dollar Japan, if that hits that resistance and begins to drop off. I like it. It's not like we got a lot of fantastic choices this morning. We do have Bitcoin on the move. So that kind of gets me leaning towards Bitcoin proxies. There's Riot. SOS, Mara, Riot, TSM, Coin, MSTR. All of these fit into my crypto list. And again, these would just be day trades, right? We're not talking about bottom fishing, swing trade, trash off of these things in some kind of, you know, run back up over Christmas or something. Just looking for some day trades in things that aren't crazy expensive. Nothing's really standing out as a warning in there at all. You know, normally there's something that'll just seem a little off if the proxies aren't running with Bitcoin, and I'm not seeing it. So that's a good lean to today. A lot of energy names. Yeah, it's not across the board though. XLE, XOM, Chevron. Halliburton, Schlumberger. Take a look at Halliburton, for example, triple bottom off that 37.5. It has continued to set these higher highs on the swings back up. Just approach it with a little bit of caution. We're not looking at swing trades though, anyways, really just a day trade. If we can get out of this IX10 then we might be able to get above 39 in the rounding and get this gap close 39.44. These kind of names aren't big movers. So, you know, the fact that it's already up 1%, it's very likely all that we're going to get. But this is a red to green, R2G. We closed way down here. We're opening this morning way up here. So we're already talking about something that's made an exaggerated move. And for something that isn't normally a big mover, look at how it has been moving recently. So focus on inside day breakout, then get through this IX10. 50% of this bar is going to be your greatest risk. And then through that, we get to the gap close above. So 38.53 is your most significant level of resistance. But energy's certainly getting the attention this morning. Seeing the pot stocks moving around a little bit, but it doesn't look like we're getting much flows in there other than ACB. And the fangs pretty much all have the same setup now. Yesterday, there was multiple names that were starting to break out, some that already had broke out and some that were stuck in the range. But if you look at them now, they're all in the lower end of this bigger candle, right? And you know, how big that candle is depends on which market we're looking at, but they're all pretty much focused on that same big candle. So it's a not overly exciting for the FANG names today. At the most, we're looking at running back up to the top of that candle for all of them. For a lot of these, it's going to be just getting back above that white line. Not overly exciting there, right? So no big blowouts are, at least right now, setting up for the FANGs. It's a pretty dull Friday. Everybody be careful